gold hits new highs as bulls set sights on the $2,800 mark. Will the upcoming non-farm payrolls report and US election fuel further gains? Should we hold strong or wait for a dip? Find out in this week's As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold prices have resumed climbing after a brief consolidation, setting new all-time highs. With Middle East tensions cooling off for now, it's been market concerns over US debt and heavy betting on a Trump victory that's supporting gold's strong performance. This week, all eyes are on the US non-farm payrolls report. If jobs data worsens significantly, it could give gold even more lift. So in today's video, I'll start with a quick overview of technical analysis and drivers, then dive into how the US election and jobs report could impact gold's future trend. Let's get started. On the gold against US dollar daily chart, yesterday's close at a fresh high of $27.74 broke a week-long range between $27.10 and $27.50. This morning, buyers are pushing up into the upper band of the June regression channel. Statistically, there's only a 5% probability of gold prices breaking above this red zone, so the bulls are facing some selling pressure at the moment, making a potential pullback more likely. But if we do get a solid breakout, that bullish momentum could continue, potentially pushing gold past $2,800. While on the downside, any profit taking might find support around $27.50. If you are wondering why gold shot up 1.2% yesterday, it wasn't really just the softer September jobs job openings data. Futures market flows played a big role too. As gold futures cleared the last peak at $27.72.6, stops were triggered and momentum-driven buying flooded in, driving volumes up and pushed prices even higher. Now, taking a broader view of what's propping up gold, we're seeing the usual negative correlation between gold and US Treasuries breaking down. Since early October, the US 10-year real yield has risen from 1.5% to around 1.94% this morning, with the term premium on 10-year Treasuries up almost 40 basis points. Gold, meanwhile, has gained over $150 in that same stretch. Also, with Israel holding off on targeting Iran's oil facilities, the market's betting on some easing in Middle Eastern tensions. So in my view, the main drivers for gold right now are traders' bets on a Trump win and concerns over the US debt load. I mean, America's debt situation is already quite serious, with the fiscal deficit hitting $1.8 trillion in the financial year ending September, around 6% of its GDP. And as the election nears, both candidates are talking, expansionary fiscal policies. But if Trump wins and we see a red wave in Congress, his policies on tariffs and corporate tax cuts could swell US debt by another $7.5 trillion over the next decade. That's more than twice the increase proposed by Harris. Also, deficit financing would mean lots more bond issuance, which would push yields down. On one side, the Fed might keep rates low to manage the debt and support growth, but on the other, traders might demand higher term premiums to cover some reflation risks, lowering real yields. With this in mind, the opportunity cost of holding gold goes down, which is great for prices. So in summary, right now, the bulls are in control, with gold's next target set at $2,800. Whether we get there by early November depends mainly on two things, I think. The first one would be the US election, obviously. If Republicans sweep Congress, we will see a new rally in gold. But if we get a split Congress, though, and President unable to push fiscal spending through, gold might face some resistance. And the second key factor would be Friday's jobs report. The current forecast is for 110,000 new jobs added in October, less than half of last month's number and way below the 225,000 break-even level needed for labor force growth, with unemployment holding at 4.1%. Since the Fed is already expecting hurricanes and strikes to shave off about 100,000 jobs, I think we need to see a much weaker report, say under 100,000 jobs with unemployment rising to 4.2% or even higher, for the Fed to consider more rate cuts this year, which would boost growth further. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. Until then, happy trading!